Hi there, I welcome you again to this next chapter in our course for candlesticks for beginners. In the first chapter, we got introduced to the basics of candlesticks. We learned about what are candlesticks, types of candlesticks, what does the green candle means, what does the red candle means, and how does the size of candle makes a difference to how we interpret the market for that day. Now, from this chapter onwards, I'll be talking about specific candlestick patterns. We'll cover both single candlestick patterns and multi candlestick patterns. So, in the second chapter, we'll talk about single candlestick pattern and let us jump right into it. So, what exactly are single candlestick patterns? So, single candlestick patterns are those patterns which are just formed by using that individual candle for the day. The previous candles don't have much relevance associated to it. It's that individual candle which helps in understanding what could be the likely movement in the market in days to come or sessions to come. As I told you already, single candlesticks is composed of just one particular candlestick for that particular day or the session. Now, most importantly, the size or the type of the previous candle has no bearing on how would this candlestick perform or how would this candlestick be interpreted for the next day. It is just an individual candle. Whatever indications we get from this candlestick tells you what could be the likely event which could be transpiring in the next day. Now, these are some of the candlestick pattern which should be talking about. We'll be talking about different Doji candlesticks, spinning tops, Marubozu patterns, hammer pattern, hanging man, inverted and shooting stars. Now these are some of the candlestick patterns which we'll be talking about. We'll be talking about the spinning top candlestick pattern. We're talking about Marubozu candlestick pattern, both bullish Marubozu and the bearish Marubozu. We'll talk about Doji candlestick pattern and how does a Doji at different points on the candlestick gives you different results or it means different things. We'll also talk about a hammer candlestick pattern, the hanging man candlestick pattern, and the shooting star candlestick pattern. So these are the 6 single candlestick patterns which we'll be covering in this course. These are the most commonly seen and the most commonly used form of candlestick pattern for a single candlestick type. So what exactly is a spinning top candlestick pattern? The most important thing is that this pattern doesn't give you any indication about the market. It doesn't tell you what could be the likely event or what could be the likely movement in the market. It basically has a lot of price action, which means the candlestick is small by nature and the color of the candlestick doesn't hold much of a relevance, but the price action around it makes sure that this candlestick becomes a benchmark. If the market trades below it or it goes above it, it means a lot because this candlestick becomes a base point because of the volume which happens in this candle. The important physical characteristic of this candlestick is that the body of the candle is smaller as compared to the wicks or the shadows of the candle. And in the body of the candle, as I've already told you, the color of the candlestick doesn't make a difference, which means the close and open of the candles are almost very close to each other, and even the size of the overall candle is also very small. And the color of the candlestick doesn't hold much relevance to what could be interpreted as a trend for the next day. So these are the important features of a spinning top. The most important conclusion which we draw from it is that the price action and the volume in the candle is very high, and which means the candlestick should never be ignored, because if you look at just the candle, it shows okay, it's just a small size, but the volume and the buying selling and the tussle between buyers and sellers gives you a lot of information about the market and how the market is thinking. The next single candlestick pattern which I'll be talking about in this chapter is called the Marubozu candlestick pattern. It is a very prominent candlestick pattern and a very strong single candlestick pattern. Probably it is the only candlestick pattern which is least affected by the previous happenings in the other session. This candlestick itself is actually a trend or a momentum setter in the market. The green candle here is called the bullish Marubozu candlestick pattern, and the red candle here is called the bearish Marubozu candlestick pattern. There are not much of a shadow or a wicks in this candlestick pattern. Even if it's there, it's very minimalistic. More than 90% of the candlestick is the body formation. In general, for a perfect Marubozu, 100% candlestick should be the body, but anything above 90% can be considered as a Marubozu candlestick pattern. Now, what exactly is a bullish Marubozu candlestick pattern? In case of this candlestick pattern, it is bullish by nature. The open of the candle is the low for the day and the close of the candle is the high for the day. In case of a Marubozu, that is bullish Marubozu candlestick pattern. In theory, there are no wicks in this candle, although a small amount of wicks are allowed to be formed. This is generally a very good trend changing indicator. If the previous pattern in the market has been a bearish one, or we are seeing selling pressure, but once the Marubozu candlestick formation happens, a bullish momentum, a trend halt can be expected in the market. If you just look at this candle on the screen on the right hand side also, you can see the buying intensity is so high that the open became the low of the candle and we could just see continuous buying pressure. It was so aggressive even if that the close of the day became the high of the candle. So the buying is very fierce in case of a bullish Marubozu candlestick pattern. Now this is a chart of Federal Bank. If you look at it on the left hand side of the screen, the prior pattern was very bearish. We saw big red candle formation and every rally in the market was being sold. But once we saw the bullish Marubozu candlestick formation on the chart, you know what happened? We saw continuous buying pattern. The next day again was almost near Marubozu, and the low of the candle of this first Marubozu was never touched again, and we saw a rally of nearly 40% in the market. So these patterns are very strong, and if they give you a good confirmation, it could actually mean the trend could be reversed and we could see a complete reversal in the market. Now, having understood the bullish Marubozu candlestick, let us understand what is a bearish Marubozu candlestick pattern. It is an exact opposite of bullish Marubozu. In this case, the open of the candle is the high for the day and the low of the candle is the close for the day. Now again, in this candlestick also there are not much wicks, although a small amount of wicks can be seen on the either side of the candlestick, but in general the body is very large. After the formation of this candlestick, if the prior pattern was very bullish, we could expect a complete reversal in the market, or at least the buying momentum could be halted for some time and we could see a dip in the market. And most importantly, just looking at the candle, we can say that the intensity of selling is so fierce that once the market opened, we just saw selling, and the selling could be seen even at the close of the day also. Now this is a bearish Marubozu candlestick formation on the chart of Tata Elxsi. You could say there's a small amount of wick, but I've already told you there's nothing called as a perfect candlestick pattern. If you get near 90% candlestick pattern, you can draw conclusions from it. If you look at this chart again on the left hand side of your screen, there was a continuous buying pressure and the market had gone from almost 920 to almost 1100 levels. But once we saw selling and the bearish Marubozu candlestick formation, we saw market crashing almost 35 to 40% over a period of next 1 month. So this is the kind of trades which could be generated using the formation of bearish Marubozu or the bullish Marubozu. The third and the final candlestick pattern, which is single candlestick pattern, which I'll be talking in this particular chapter, is called the Doji candlestick formation. Now this candlestick formation is very similar to spinning top candlestick pattern, but the important thing is that in case of a spinning top, the length of the candle was very small, but in case of a doji, the candlestick can be a small one or a large one, but the open and close are virtually the same or they're very close to each other. So this is the main characteristic of a doji. There is no physical body associated with this candlestick, but it provides you very crucial information about the market. Let us understand how. Now if you look at the candle on the right hand side of the screen, the candle had no body. The buyers tried to push it up, the market went very high, but again the sellers gained control near the high. It came down and the market made a big red candle, but eventually couldn't sustain the selling pressure. The buyers took over again and the open and the close became very close to each other, and which is where the doji formation happened, which means there was a lot of price action. There's indecisiveness in the market and the buyers and sellers couldn't be differentiated, but the next day candlestick formation could pave way to what could be seen in the market. Now this is how a doji would be interpreted if it's at the middle of the candle. But imagine if the doji formation happens near the high of the candle. What would that mean? The market opened up, came down all the way, we saw big selling pressure and looked like a red candle formation. But what happened? The buyers took over midway and we could see continuous buying pressure, and the open of the candle became the close of the candle, which means this is how the doji would look like. It looked like a T formation in the market. What would you interpret by that? There is a bullish momentum in the market. If the next day opens above or near the doji formation, we could see buying coming in the market and we could see a big rally in the market. Similarly, if we see a reverse T formation in the market, what would we interpret by that? It would simply mean that the bulls did try to push the market up once the market opened, but eventually sellers took over. We saw loss booking from bulls and the market closed near the open of the candle. Now the next day again becomes crucial. If we see selling pressure we could see a big momentum on the downside in the market. So doji at different points on the candlestick could mean different information provided by them. Now this is a chart of ITC Limited. We saw doji formation on the left hand side of the screen. It formed near the low of the candle. What did we understand so much? If it forms near the low of the candle, we could see selling pressure, and which is what happened. The market almost fell 18 to 20% after the formation of this doji candle on the charts of ITC Limited. So this is it from me in this chapter of single candlestick pattern. We have understood 3 candlestick pattern. In the next chapter, we'll again continue discussing the single candlestick pattern. Do go through this chapter again if you have doubts regarding any pattern, because we need to understand clearly to be able to apply it on the market. I thank you for your patient hearing in this chapter. Again, I'll see you in the next chapter where we'll continue discussing single candlestick pattern. Thank you so much.